Hey guys, welcome to another episode of the Traders Show, brought to you by Financial Hub, and this episode is proudly brought to you by Paperstone. So in today's episode, following up from the last episode, we want to bring you guys up to speed with our trading, how we've evolved over the years, how our trading is right now, because we mentioned in the previous videos that, like personally, I remember if you watched the previous videos on risk management, I shared how my trading has really changed, and part of it is I don't trade that much. The opportunities I'm looking for have really reduced, but also at the same time looking for higher quality trades. And how do I manage that? What's the change? How is that going to help me? Will I be able to achieve my goals? Because I remember there's a student of mine was asking me about how to be able to pass a prop firm very fast.
Very fast.
If I've updated
Not
my system,
just fast.
very fast. Like they want to pass, as in kupita si shida, but they're taking so much time. They're looking for a way to pass the prop firm. So
All the best.
so if you're watching that episode, my friend, I'll explain it here. But I'm your host, Caleb. I'll let Ken introduce himself, then we get straight into the topic.
Yeah, so like Caleb has said, my name's Kenneth Monene, but I go by Ken. I will be talking about trading. I've also received very many questions. Initially, I used to post a lot about my trading through especially my Instagram account, and sometimes through YouTube. I'd give you at least a bi-weekly update. This year has not been like that. I have somehow, like I said in the previous podcast, somehow matured. So I no longer find joy in just sharing that and showing people what I'm doing. So I will be sharing with you. I've changed a lot, not very seriously, obviously, but I've tweaked here and there, because by the end of the day, trading is all about knowing what's working, capitalizing on that, knowing when it's not working, and leaving that particular thing. So you must be very good at knowing those two things. And I think that's what you keep on learning as you continue your trading. So I'm going to also go through that, what I have been doing to update my trading, what I'm doing on the prop side, the different firms that I'm trading, and then you guys will be able to pick one or two things. I always say that when you watch a 40-minute video, you don't need to grasp the 40 minutes. You just need to grasp the one thing that was important for you, because that one thing, again, will vary depending on the person and where you are in your journey. So I think to start off, I could start with me. My trading here has not been the best of the best. I think last year I had a very good year. I had one of the most profitable years I've ever had. And I thought coming into this year, you would somehow continue with that trajectory, although the year has not ended. So never give up until the year has ended. But this year has been quite challenging and volatile for me, specifically in my trading. I started the year with very many plans. I think I started the year with a plan of buying about $1 million in challenges. Had some hiccups here and there, didn't manage to pull through. But I have some challenges. I'm somewhere halfway around there, so towards what I was looking for. And I've been trading those accounts, and trading has been also quite a stretch. Doing well for some periods. I think around March, April, May, I was doing quite well. But June, July has not been very, very positive for me. July was positive. I closed the month, I think, about up a percentage point something, 1 point something. But I think after April, let's say even between January and July, I've learned a lot about what I should keep doing and what I shouldn't keep doing. So, for example, one of the updates I've made is I've stopped trading gold.
We've partnered with Paperstone, one of the world's leading forex brokers, my personal best, to bring you an exclusive opportunity. And trust us, you won't want to miss out on this. We're giving you the chance to learn forex for free at Financial Hub, but there's a little twist to it. All you need to do is find your Paperstone account, and boom, you're all in. Deposit $100 and get access to our basic course. Perfect for beginners. Or deposit $250 and get access to our exclusive course that is best for advanced traders. Why is this huge? Because you get to learn while you earn. Trade the real money and get real experience. And also you get lifetime access. Once you're in, you're in.
I've been a long proponent of trading gold for a very long time. I think I've been a lover of gold. I've made money from gold. I've lost money from gold. But I got to a point where I saw that net, what I was doing on gold was not productive. So what do I mean? I looked at my data, and this is the beauty of collecting data and knowing that when you're trading, you're essentially collecting data. So looking at my data from January of 2025 all the way to June of 2025, end of June, I had about 13 or 14 gold executions. Of those 14, I think 1 or 2 were winners, 12 were losers. So essentially, I was losing money on gold. And I tried to look for the reasons why I was losing money on gold. And there were a couple of reasons. The first one being, obviously, yes, my system was not working as well on that market. But I also realized that the market itself lends me to impulsive decisions. What do I mean? I realized that, for example, I might take a very good setup that really looks nice, is in line with my process, and execute it. But once I execute it, the setup spikes me out. Let's say, for example, I'm taken out through a spike, or I'm taken out through markets reversing. But then markets quickly come back. So that means that somehow I might have gotten the right idea, only that probably my timing was not so well, or my execution was not so right. And what will I do? In that view, I will say, let me come back again into this position, looking for the money or the the returns that I was looking for, because it looks like I was right. But then again, I'm spiked out, either the following day or markets just rally slightly, then reverse. So I found it very hard to clearly generate consistent profits from that market. And what I would discover is I was consistently making money in other markets, but then I was coming in and giving back that money on gold. And so I decided just that the best thing for me to do was to stop trading that market, at least for now. Let me stay off that market. Let me just focus on markets where I am consistently making money. And I think for me, I've realized that when you're trading a particular instrument or even a style, you should not just look at the profitability of the market. You should also look at the mental baggage of trading that market. Like, for example, since I was looking at my data this year, I decided to also go back into last year's data and see how my gold has been. And I realized even for last year, net, I made about 4 or 5% from gold. Meaning majority of my returns were still from another market. So I am mentally going through a lot of torture that the reward that I'm getting from that market is not justified. And so one of the updates that I made is I stopped trading gold and I decided to just focus on trading GBP USD and Euro USD. For me, only based on my data, these two markets have given me consistent profits, have always been loyal to me. When I think I'm wrong, there's almost a 70% chance I'm wrong. When I think I'm right, there's almost a 70% chance I'm right. So it's very easy for me to manage positions in these markets, because once I'm wrong, like this week, I executed a trade, went into profit, and then the following day towards New York session, I just observed price behavior and I thought this will probably not work out well, because based on my understanding of these pairs, this is not how they react. I exited those positions. What I thought happened. And this has been happening over and over and over again. But there are some other markets whereby when I think I'm wrong, the markets work. When I think I'm right, it doesn't work. So it's very hard for me to develop a consistent framework. And I realized probably the market conditions had changed, or my system was not delivering as well in the particular environment at that particular time. And that's why I decided to stop trading gold. So that's one of the updates that I've made. And I've seen the impact of that.
And how is it now? I think it's the first time in history since we started trading since 2016 that you have lesser pairs than me.
Yeah.
It's never happened.
It's never happened. It's never ever happened. It's always been the other way by there. I always tend to look at more things, and then I have an array of opportunities and you have very limited things that you're looking at.
Yeah, me I've always, like, I remember for a long time I used to trade gold, Aussie dollar, USD card only. Remember?
Yeah. And by then I was trading about double of that.
Yeah,
6
you're
or so. I
trading
was
about
trading
6.
oil, I was trading an index.
So, just on an update of that, and you said about gold.
Yeah.
Ulitoa hizo zingine, oil, nini, how
same procedure. I think I actually was answering that question, like how did I get here? I think for me, my journey has been moving from being too wide to being too concentrated. Like, I'm realizing that for you to make money in the markets, your net has to be concentrated rather than cast wide, because you'll find that you tend to do well in one or two things. Even if you look at most money managers who've done well, like I remember there was a guy who I was looking at called Nick Slip. Nick Slip ran a fund from around 2008 to 2020 something, and then he closed it. And Nick Slip had 70% of the fund in Amazon only. And he made a big fortune from that.
Of course. You know Amazon has gone.
Yeah, just by being concentrated. You get? And that really made me change I think what happened is I've changed my idea of what I think will lead to profitability through experience and data collection. Whereby initially I thought the more pairs you have, the more opportunities you have. The more opportunities you have, the more the chances you'll generate higher returns. But right now I've learned, no, it doesn't work that way. Cut. The less opportunities you have, the better, because those opportunities are probably high quality. And if those opportunities are high quality opportunities, then you're definitely going to consistently be making money. And one thing you realize also that again changed was I moved from thinking of generating high returns to thinking about generating consistent returns with high capital. So rather than thinking about how I'm going to make 10% this month or 5% this month, I'm comfortable making 3%, but on $1 million fund. And I know because of the instruments that I'm trading, next month I'll make 2, the other one I'll make 3, the other one I'll make 4, the other one I'll make 1. So because of that element, I'm comfortable trading very few pairs, but delivering consistent returns. And those few pairs, again, are based on my data. So if you look at essentially what I'm doing actually, I'm only trading the dollar.
More or less. I was about to say the correlation.
Yeah. So I only trade the dollar and I don't mind. Initially, I would actually say, this is too concentrated. But no, if it's too concentrated and that's where you understand the most, the better. It's only bad if you're concentrating on something you don't understand. But the fact that you understand these markets work well with your method, they follow your procedure well, then you should really pound on them and concentrate on them, because ultimately that is what will enable you to consistently deliver good returns. And so for me, if you ask me, I've had a very difficult year up to now, but I think this has been one of the best experiences. I'm not yet actually officially out and into the payouts, but the data I've collected and the decisions I've made are the reason why I'll get consistent payouts moving forward and keep on developing the consistency, because it was through that losing period that I realized this is not working so well. This approach is probably not working so well here and all that. Well, I'm also trying other markets now in line with the data I've collected, which basically, like I'm telling you, I've realized I'm only trading the dollar. However, I'm expressing those dollar trades through GBP USD and through Euro USD. But I'm also now trying. I've not brought it in. I'm still collecting data. I'm still trying to see if my approach will work on USD card, which again is another dollar pair. So you can see that I've found my sweet spot and I want to stay around that sweet spot for a very long time, because it's only through that I've seen you can be able, initially when we started trading, like even Riz, I've realized that he only trades Euro USD. I've never seen him with another position. He only trades Euro USD. And I think very many traders get to that point where you realize, based on the data that you're collecting, concentrate. I think you've also done the same. you have really cut down on how you're trading, the time frames that you're looking at.
Yeah, I've cut down and eliminate. Is it cut down or eliminate?
Exactly. And you know, the funny thing is, for the person who's starting to trade, he tends to think that for him to make money, he needs to add more and more and more and more things. You know, more pairs.
You know, everything makes sense when you're in that stage.
Exactly. More
So you want to
strategies.
try everything. And that time, everything makes sense and everything is not working.
Exactly. So, after you've stayed in the market long enough, then you quickly switch it up.
So you've said about the pair. So how's your approach now, trading-wise?
So nowadays, it's very, very easy. By Monday, New York, I'm almost done with most weeks because by Monday, New York, I'm either committing to a particular position. I know that I'll be stocking a particular position, or I know that I should be out of the market for this week, depending on where prices open. Okay. And that has made it very easy for me now because once markets open, I can just check, see, okay, because I also trade on a week-to-week basis. That has not changed. I'm also focusing on the 4-hour time frame. Not changed. So what just changed is the number of pairs. And I'm also now keen on London and New York. I don't execute sessions during Asia. I don't look at markets past sometimes. That is just not part of my process. And I don't pay attention to those things. I start my trading at around 9 a.m. Kenyan time. And by 8, 9 US time, I am not making any decisions. So it's very hard for you to find me at 11 saying, no, I should be taking this
11
trade.
p.m.
Yeah. Or I should be waiting for markets to do this. No. Those times I'm off the market.
So you said your main time is?
London and New York. So when London is starting the first hour towards London and after London, very keen. After that, I'll come in at around 3:30 towards New York. Check what markets are doing. I'm also very hesitant again to make decisions during the open. I tend to think that time also has a lot of noise. So I avoid making a decision and at least my approach helps me with that because I don't need to make the decision instantly. I can wait for the first hour for me to see.
So do you feel like you're missing any opportunities in the things you cut? Oil?
No. I'm missing out on losses. I'm missing out.
Do you watch them?
Yeah, I do watch them. I will look at what gold is doing. Like right now, I know gold is trading at around 33, 20 something, 33, 30 something. I know where oil is around 63, 64. I'm still a trader. I'm still curious. I look at
and
this market.
Guess that's as of today. They might be watching it and a different outside.
No. As of today.
As of today.
Yeah. So, but at the same time, I always just come back and realize that was a very good decision because I think I can count to you how many trades which I thought, this is a good trade and it failed. This is a good trade and it failed. The market is going here and it failed. So I think that has also taught me that less is more. Quality over quantity. And like you were saying, that's why I was laughing. The fast approach does not always work. The slow approach always works. If I tell someone I'm comfortable making 2% consistently per month for the next decade, they will tell me that's very little. But if you do the mathematics, if you can do that, you will die a very wealthy man. So take it slow, mature in the game, and just be patient. I think also that's one thing I'm learning. I think I've actually found people telling me, hey, you're patient. And I'm wondering, okay, I never noticed that I've become that patient. But yeah, I think also that aspect in the market has taught me that be patient. These things also take time and they will work out in the long term.
And in the previous videos that I shared that have been uploaded, I was talking on risk. And you, how's your risk now?
I've not changed much in terms of risk. I'm still risking a percentage per trade, especially on the prop side. I'm still looking for a risk reward of between 1:2, 1:3, an average 1:2.5. My entries are still the same. So I've not changed much on the risk side, especially on the prop side. But on the retail side, now I find it wise to change. On the retail side, I might even risk up to 2% per trade because...
Retail side, personal account?
Yeah, because I'm very, very...
What percent?
Even up to 2.
Okay.
Even 2.5.
Yeah, that's actually good because it's the same thing I talked about.
Yeah.
On the risk management. I said personal account with Paperstone.
You can do much.
That one 2% is fine.
Yeah. So that side now I can take more risk. I'm comfortable. I think there is no daily drawdown rule. There is no maximum drawdown. So I can take risks. I'm happy with the volatility as long as it's progressing in the right direction. So yeah, I think on the risk side, that's much that I've done. But I'm also now very careful about the risk reward, like cutting losses quickly, ensuring my wins run to the best levels possible. So still doing that.
Okay. So I think that's mostly of my questions. Me on my side, I'm doing some counseling. And in the counseling, I got to discover, you do a lot of reflecting in therapy. So you get to reflect. So there are questions you normally asked. So I came to my own thoughts, also open for discussion, that to me, what we just keep saying, people rarely change. People can change, but rarely. Just change. For you to change who you are, it needs a lot. So you can't just easily come and say, hey, me after 2 years, I'm a changed person.
Yeah.
It's quite hard. But I believe people evolve.
Yeah.
So that was my conclusion. We easily evolve. From, it's like the same way with my son. Sasa vile nalea mtoto, namwona ki-evolve. I change much. It's the same kid, it's the same person. It's just evolving and not from not being able to crawl to crawling to trying to walk. So you grow and evolve. So also my trading has more or less evolved. It hasn't changed much over the years. So it has just gone evolving, and that's the same thing I was sharing in the previous videos. Trading plan evolves, system evolves, the market itself evolves. It doesn't change. The market, the same things happen. The ones who keep saying market it, ashuka it, asonga side. It's the same thing. But it evolves with volatility, the volume that's in the market.
The factors.
Yes, exactly. Yeah. So with my strategy, just as Ken said, also mine has drastically ile kabisa changed. Actually, to drop the bombshell first, it's important for me to say, keeping track of, this year I haven't traded much. This year is one of those years nimeka out of the markets for a big time. For a long time, not a big time. So yes, we look at markets. Yes, there's this trades, and over here tunaweza angalia kujaribu kuchukua na small account, remove some profits kidogo. But I haven't really traded. I haven't traded really actively. I've taken almost 6 months out of the market. Hiatus. I watch the markets. Yes, markets siko. I still do research, backtesting. Everything that I have planned is there. But with the accounts that I'm saying we have now with the FTMO Nini, I haven't been trading. So these are just recent developments. So during this time, I've learned a lot. It's one of those things, I used to read these things on Jesse Livermore's books, Nini. I saw my trades due 20, 30 years. Unasikia msali 2 years aja trade. You wonder, bro, how did you waste 2 years of your life not trading? And then somehow those guys also explaining, when I came back to trading, there was a lot of changes. Hata nikaanza kutrade better. I think trading is all about, for you to trade successfully or profitably consistently, it's all about you working on yourself. See about ile P&L and how many years those P&L have been, how consistently month on month you've been making money. These days I can fully understand that. Mtu akiniambia I took a 3-year break, or I'm currently taking a break of trading. We've evolved to that point of, do you? See ati bro, no, take the break while still in the market, nini. Take your break, bana. Take your break. Do other things. Endo angalie. Try things. So for me, I've been in that journey sort of, and it has been good. And how I've evolved now that I'm back to the markets and I'm now trading actively and watching the markets is, during that time I was away, the 6 months of active trading, I noticed something. I said, let me watch the markets and be very, very practical with, if I was trading, what are the setups and what I'd be trading. And I looked the number of trades. Now, for me, I trade 4 pairs. As Ken has said, he trades 2, may trade 4. And I stick to also markets that are heavily affected by the US market, which is gold as a commodity, then the others are indices. So I don't have any forex pair. I don't trade any currencies. So it's only gold. Then I go to the 3 indices, which is the 3 US indices, the main ones, Nasdaq 100, S&P 500, and US 30, Dow Jones 30. And I focus on those ones. So during that period of the 6 months, I've watched markets objectively. I'm not just in a bias. I'm not in the markets trying to make it work. So I'm just watching the markets objectively as an observer. And I think that's also part of trading. We can't really say if you're actively in the markets, doesn't necessarily mean for you to be in it. It's like the way you can be a footballer, you have an injury, but at the same time, you continue looking at strategies, you continue looking at how your teammates are playing, how you can change
Follow
and how
up
you
on
can
games.
you follow up, how you can do better and improve on other points, change some other points. Now you're watching as an observer how we can help improve.
Yeah.
So that's the same thing I went through, that sort of period, as Ken was saying, hiatus, but active hiatus, and non-coach markets, and the number of setups I could have had, and the number of trades I could have had, objectively, si tu zile ziliwak, hata zile za losses, were very few. I think it was coming down to roughly 2 or less trades a month. So this whole year, if I was to trade those main setups, ningekuwa na only about 6 to 12 trades for the first 6 months of the year. Because the whole of the last whole month nimekuwa na my account, I've not traded because I've not gotten any setup. And then all of a sudden you find a market like gold that brings setups mbili zikifuatana within 2 weeks, for example. So I've watched a lot, I've observed a lot, also backtesting and looking at that data, and everything merges together. The backtest, the live trading, hiyo yenye naona si ile yangu. Najua kuna ile when you're actively trading, you can actively force things and give the reasons why it was a very good trade. Na ni ile tu, truthfully speaking.
Yeah.
So now how have I updated my system? I've incorporated more things into my system, and I wouldn't say I've eliminated. No, I've not eliminated. What I've eliminated is, and I think I started eliminating this, is 1 hour chart. Your chart nayo kabisa, my friend, never. Forget about it. I'm not in a rush to trade. I'm in a rush for quality, and that quality comes with significance. And I think the 4 hour holds good significance.
Yeah.
So if I just break it down now from top down, all my pairs, my gold, my indices pairs, the stock market, I was telling Ken, tulikuwa tunaongeleshana and updating each other. I'm net long. So that's a net long pair. I don't look for shorts on the indices. I'm a net long. Now, if you look at these markets, these are markets that have been in a net lifelong
long
market.
position, yeah.
Yes. If you look long net
term.
since it started, from where it has gained value. So the price has reflected that over the years. So it's gone up. And like currency pairs, I'm not saying currency pairs should also go up. Those are 2 pairs against one another. So they're looking for equilibrium. Euro, itacha $2 equals strong. They'll make things, even the market itself and conditions, which will happen that will strengthen one, weaken one.
Yeah.
But when it comes to indices, it's like trading Apple stock. It's just Apple. It's not against, see Apple, Tesla, now Tesla and then again. You get my point? Yeah. So on those ones, I'm net long. Gold, though, I can fluctuate depending on the season. It can also, gold, there's a time I was looking at the data, I don't know when it was, I think it was from 2011 to 2015, about 4 years, gold was in a bear market. So in such environments, I can't just say I'm a net long gold also. So gold, I tend to fluctuate, looking for, depending on the current trend of the market. So I look for the trend. So I'm a trend follower, just as Ken is also a trend follower. So we rarely do reversals.
Yeah.
We rarely looking for tops or bottoms.
Hey, we don't play that.
We don't play that game. I rather look, and I keep telling, this is not my strategy, but I keep teaching my students, I rather look for a double top in a bear market and look for a double bottom in a bull market. It might sound confusing to a first-time trader, but it's something we'll share later on if you join our webinars. We keep explaining those live market scenarios in the webinars if you join us. So I'm net long. Those are the pairs I trade. I use moving averages, the 200 smooth moving average and the 50 EMA. I think they work quite well, especially with the commodities and indices. Not to say that they don't work well with currencies, but I've been watching a lot of value-oriented markets, Bitcoin, cryptos, indices, the stock market, and commodities, and they tend to really work well. They work well as dynamic support and resistance, as well as also giving us a sense of direction. So not only just support and resistance, because they're dynamic. They're not like a trend line or a key level, which is static. Like a trend line is You get my point? Iko fixed kama ni $3,000 on gold in your line.
Yeah.
Moving average is quite dynamic. So I use that quite a lot, especially. So I use the moving average on the daily and the weekly chart.
Yeah.
So Y200, Y50, 50 it covers, 50 moving average covers the last 3 months of active. In a month, we have roughly 20 candlesticks, daily candlesticks, or 20 trading days, roughly, give or take. It's a bit more, but if you round off, so the moving average covers that for about 3 months, and the one for 200 now is 4 times, so it's for a whole year. So 4 quarters. So it gives that average. So that's what I use, so giving me direction and trend. Then I come down and use pivot points. So pivot points was introduced to me by Ken and Taras, and it's also a very good indicator. I use it in 2 ways for looking for overbought and oversold levels. So if a market is trending in an uptrend and we are trading near R3 or above R3, hata setup yangu ikaje, yoni one of the things I will not trade. If we are trending below in a downtrend and market is near S3 or beyond S3 uko chini, setup ikijitengeneza, I will not take that trade. So for me, I'll trade the market if my whole pattern is coinciding around the P equilibrium level, or if it's an uptrend, ikuwe below P. So inacheza between P and S3. Ni reo ipati in an uptrend iko huko chini below S3. But sometimes inakuanga. So if I get such and it's in line with my pattern, those are very, very good trades. So those are things I look for. So I use pivot points like that for looking for overbought, oversold levels where to avoid trading, and also as an indicator of where now I can buy. So I want to buy a market that is trading below pivot point P. And then I move on to key levels. I trade that a lot as well. So key levels and pivot points sort of coincide because can you say pivot points are sort of dynamic static levels? Because they move next week. Okay. It's not the same.
It's a good way of thinking about it. I never even thought about it that way. Yeah, that's a very good way of
dynamic static key levels. They're basically key levels.
They're very good key levels, and why I like them personally is because they speak to me. Unlike other levels, they don't speak. Like you're saying, if I have a 1.35, that's a level. But it doesn't tell me if market's overbought or oversold or fair value.
Yes, it's just a level.
It's just a level.
Yes.
Yeah? But if it coincides with the pivot, it tells me at this point for this week, like you're saying, markets are overvalued.
Yes.
It would be wiser probably to wait for next week and see will prices open at fair value and valuation or nowhere. So you pay attention to those things and it really, really helps. So like you're saying, they're dynamic. Yes, they keep changing, but they're also static. Once they change, they don't change that much. They'll just change for the week, for the month, for the year. That's it. So it shapes how it really helps in creating structure, I think.
Wonderfully put. The pivot points speak to you. There are key levels that speak to you. Yeah. So I use that as well. So that's part of my other things. Fibonacci is another main one because when I'm trading, I'm looking for markets moving in the direction of the trend, then a correction. Now, I have certain corrections. Just because market may correct kidogo doesn't say, okay, Caleb, let's trade. No. Inaweza kuwa correct kidogo, iko tu hapo kwa P, nini. No. At a key level, that doesn't then tick the box. I have main levels that I'm watching. So my main Fibonacci levels I'm watching is 50, 61.8, and 78.6. Sometimes on a bigger time frame, I also watch the 38.2. Because I've noticed with the backtest data, indices, when it's in aggressive market, they tend not to really have a deep pullback. So it a pullback, it afika 50, because if you look at 50, it means the previous impulse level, market may correct by 50%. Half of it. So when market is very aggressive, rarely will you see, like that trade when I was sharing, was it in this podcast or the other one? The one I said I took that trade in the class with my students. Yeah, that market had gone to P. It was around 38.2 Fibonacci level. I took it and it worked wonderfully well. So Fibonacci is another one. So market has to coincide. For me, I consider a correction once it's attained those Fibonacci levels. Kama iko huko ati imecorrect tu kidogo na chezo huko at 20% huko, those are not corrections for me. So I'm not looking to trade those ones. Time frame that I'm looking to trade, I only focus on daily and 4 hour. Those are my main. Daily for direction, 4 hour for patterns, candlesticks, indications, and then what else? Yeah, mostly those ones. If I've left anything, maybe I'll explain that because I have them written down in my trading plan. Other than that, those are the main ones. And then the main thing that I trade now is my trading pattern, which is flag pattern. So all those things coincide with one another and I get a trade. So someone might ask me, Caleb, unaangalia hizo vitu mingi, utaipata trade? Like I said, in the last 1 month, hakuna setup imeform. And me, I'm fine with that. That's my strategy. That's my approach. When I get, like Ken was saying, quality over quantity, I'm comfortable. I can risk that 2%.
Yeah.
For me, I can get risk rewards of 1:3, 1:4. If I get a good 1:4 and I have 2%, roughly, theoretically, I am to make 4%, 8%. 8%. And why I say theoretically is because practically I have my own risk management in place where I take 50% profit at certain levels. So I won't make that actual one, but it will be more or less above 5% return. So even though trading strategy yangu may evolve over this year, and that's my current approach now. 4 pairs, stick it, less is more. Look, guys, kitambo, ningekaa 1 month bila kutrade, ningeanza kutafuta trade.
Hey.
These days, experience has shown me, Caleb, ungoje, these accounts are going nowhere. This market is going nowhere.
Yeah.
But if you want to trade everywhere, there's only one direction and your account is going to go down. Yeah. So for me, that's how I've evolved. And that's, I've already said time frame. I said time frame, 4 hour daily. Yeah. Anything else? Candlesticks, I wait on the 4 hour close. So in a day, I only pay attention to 4 candlesticks. 8 a.m., 12 p.m., 4 p.m., 8 p.m.
Just 4.
Just 4. And I strictly wait for market candlestick to close. So I'm not watching in between how it's fluctuating. So those hours in between, I'm not really disturbing. Maybe the last 1 hour before the candlestick closes is when I can pay attention.
Yeah.
But at candlestick may close and have no signal or no entry, acha tu niangalie hii new candlestick inacheza aje niingie. No. I'll wait for between 11 to 12 or 3 to 4 your time in New York, or 7 to 8 vile candlestick in a close. Like I remember when I was having my class, because our classes we normally teach between 6 to 8, that trade I took was ilikuwa na karibia sasa, it was going from 7 to 8. So your candle ilikuwa na close that 4 hour. And that's when I executed that trade. So those are the only times I'm paying attention. And trust me, it might sound easy because now that we've broken it down like that and we don't take many trades, someone will say, Caleb, so trading is easy for you. It's not easy. It's still challenging. It's still, there are still mishaps here and there, things you need to handle. Risk management inaweza kuchenga kidogo, psychologically. Ken and I tuchezangi na risk. Siria nipate Ken aseme, I took by mistake 3%.
Yeah.
Ati, kuna hii trade, sijui nifunge nitoke. No. Tulifanya hizo vitu we learned kitambo. So, in terms of my trading strategy, I think that's how it is, and me, I'm comfortable. Maybe one day when you bring back Rick, ndaneza tuelezea vile iko kutrade uko 15 minutes.
Yeah.
Ken and I don't think we've ever sat down with Ken. No, we've ever, but it's been a long time since we sat down. I'm looking at the 15-minute time frame, and that this trade setup, I'm looking for an intraday.
It's a very, very fast market down there.
It's a fast market. Rick can tell us how he handles it. He's explained to us before, but he should now give you guys in detail vile tumwambia our break it down. So Rick, we expect you here soon. The guys are waiting for you to give hope to the scalpers and the traders.
The traders.
Yeah, the intraday traders.
Yeah.
Those ones. So yeah, that's I think how me approach. I've covered everything. Risk, I do 1%. Like you say, me cheza between 1.5 and 2%. 1.5 maximum on FTMO account. I don't go above 1.5 because that's the maximum risk
that you can take
on them. And I explained in the previous video. So if you have not watched the previous risk video, I've explained everything in terms of risk management and how to manage it. Yeah. So that's pretty much it.
I think for me, the other thing that I think I've changed, which is somehow something that I never thought I would change, and that's how I would stop, is after a big win nowadays, I tend to take breaks. After making good money in the markets, I tend to take breaks. And the reason for that is I realized often the periods where you are likely to make mistakes come after big wins. So after a week
Yeah,
where
yeah.
you've done a good solid 5%, just take a week off, 2 weeks off, take a month off. You've gotten a payout $20,000. Take a month off. You
At
don't
$2,000
Yeah, you don't need to be in a hurry
to
Yeah,
make
okay,
more.
even 2,000.
20,000.
You can take your break. I don't have a problem.
Yo, mtu atasema of course that I'll take a break. Wapatie realistic figures.
Yeah, okay, yeah. So those amounts. But after a big win, take a break. You're most likely liable to make a mistake after a big win. Analyze your trades and you will see. After big wins, markets are likely to become challenging to you. And you're likely to start doing stupid things. So if you want to do well in trading, after that, take a week or 2 off. Just like Kaleba said, even a month, even 3 months. Sometimes you might find yourself with some good portfolios, a good account. You've made some good money. You've made money that someone can never make. Like, there are times where you can see in your account some amounts that someone might struggle to make for a long time. Once you see that amount, it hits your bank, just take a break. Don't assume that next week will be the same one like last week and the other one.
So nimeshika hii maneno.
That's not
Let's
how
look for
trading
another.
works. That's not how it works. Take a break. You'll come back with fresh eyes. You'll have absorbed that what happened. You'll have made probably plans with the money. You'll have allocated it well. Haitakuwa kwa kichwa yako. Utakuwa umeacha
Pararira nyingi.
Yeah, we can say pepe mingi. Utakuwa umetulia. Yani
Pararira.
now the money will have synced in. There's some amounts mtu akwambia, I'll send you 3 million and you don't have it. Kichwa itakimbia kidogo.
So tulio absorb.
Thank you. That's the right thing. You make good money, take time, absorb it, understand that you've made this money, understand that you won't make this money every week. Okay? Because I've seen that's where we go wrong. You assume that last week we make 2 million. Next week Neza make 300, next week 500. Life doesn't work that way.
And same vice versa.
And same vice versa. If you lose a certain amount, cut it, take a break, you'll come back. They really, really help. Trust me. They really, really give you perspective and they help. But often, when people are losing, they're forced to take a break. You're forced because akili imechemka.
Can you FT more so lose account?
Exactly.
No option.
But now on the other side, when you're winning, rarely do people think of taking breaks. And that's when I think
for sure,
you should really take a break. You made some 2-3 million, take a break. That will really, really help you moving forward. So I think with that said, we can stop there. We'll catch up in the next one.
Yeah, so guys, hope you've enjoyed. We'll come up with more strategies. We'll bring more people to share their strategies. I think we need to bring Rick back to talk about his scalping. Kwanza kuna niliona juzi akipost sijui he woke up to some winners na lalangi na trade.
A breach of the rule.
Nataka kuelewa what changed to woke up to profits. Alisema aliamka TP ilikuwa imegongwa and he told us it's rare for him to sleep with that trade. So we bring him back, we see what everyone evolves. Not that he shouldn't change, but what's new, what's changed? Has he incorporated most new markets? Because we last left him on a trade card GPY. Have things changed? So yeah, it's just good banter to know what people are doing, because we, as much as Ken and I look at the bigger time frames, atusemangi ati this is the only way. Kuna watu wakina Warren Buffett yao ni years, yetu ni days. Kuna watu yao ni hours.
Kwanza wewe anakuona kama wewe mtu wa kushikilia ukolo wa time frame. So
exactly, it's beliefs. It's all about beliefs. Like those two traders, the ones I mentioned, ule the guy Wisdom did an interview at Prison.
Words of Wisdom. Yeah,
Words of Wisdom. The Prison guy who turned 30K into 10 million. Compare him to Lance. They're very good friends, but this guy's a day trader. Lance is a day trader. This guy from Prison is a swing trader.
Oh, that guy is a swing trader?
Yeah, this guy is a swing trader. As in, wako totally opposites. He said your time here, COVID, when markets were up and down, he was day. But when the environment changed, it wasn't working well for him. So he started focusing on swing.
He trades which market?
tickers, hizi stocks too.
Okay.
You'll find him. He talked about Netflix. He was long Netflix. Different stuff.
And by the way, I could also tell you guys, if you really want to make high returns in the market, you should probably stop looking at currency markets. I don't think that is where you'll make high returns.
Yeah, markets zinasonganga in a whole year imepanda
5%, 10%. It will be hard for you to deliver those returns. But you know,
diversify.
Have you seen what Oracle has done this year?
In terms of returns?
Yeah.
No.
Oracle is up over 100%. Larry Ellison is now the second richest person.
I'm not.
Worth about 300 billion.
300?
300 billion. Check.
Ellison
is behind Elon Musk. With
at
about
300.
300. Ellison's stock has doubled.
If it has doubled, then it
has doubled. It's come from about 100.
I've not been to Bloomberg Billionaire Index for a while.
About
so you take a break from looking at these people and work on yourself. So in delusion, thinking you'll be the next billionaire. Work on the ground. Hey, Namona hapa to 80 billion. Hey, that's crazy.
Yeah, so his
Mark Zuckerberg to 60.
Yeah, his stock has doubled.
So this Elon Musk, Larry Ellison, Mark Zuckerberg and Jeff Bezos combined is over $1 trillion.
Yeah. Individuals.
Wow. 4 people are worth $1 trillion.
Together.
Guys, in comparison, Kenya has a GDP of 100 billion.
Yeah. Kenya.
So these guys combined at 4 people are 10 times. Tunasimanga na Ken, look.
We always say
suko ubaya.
80%, 20% of the wealth. 80% of the wealth is owned by 20% of the population. Even for those billionaires, 20% of the billionaires own 80% of all the billions. Because how many people who have $1 billion would make up for an Elon Musk?
Bill Gates ako number 13.
Yeah, Bill Gates ametolewa top 10.
Yani Steve Ballmer employee amempita.
Hey, Ballmer employee ako huko juu. But Ballmer is the biggest shareholder for Microsoft. He owns about 4% of it. Yeah,
Bill Gates aliuza.
Aliuza zote.
Yeah, aliuza mingi. There was a point I was going to say your time imenitoka. But anyway, wealth is not made overnight. I was looking at the billionaires. Juzi wametoa Africa list ya Forbes. Not Africa, the black. No, wametoa ya worldwide, but kuna a black segment. Looking at the black richest people. Of course.
I think that thing is still a thing. Black people are not people. Like they're put in a different segment, like from white rich people. I want to see the black people who are rich.
I might find it fine. Like, ina motivate pia mimi nataka pia kuona hiyo black. Acha nione mai. I want to become white. Mimi si Michael Jackson. So, what's his name? Aliko Dangote has gracefully owned that seat. Ameacha number 2 nambali.
He's now what? 30-40
23. Ameuka tu bado 23. After ile refinery. He wants to become the biggest refinery in the world. Ambitions.
He wants to surpass Saudi Aramco.
He wants to be the biggest refinery. The ambitions.
Even billionaires fight.
Even billionaires fight. He only fights. He wants to be the biggest in the world. So it's motivational purposes. Pia si tunaangalianga networks zao say. So hopefully one day pia si tutafika somewhere where someone can say
we are somewhere. 100 million is
represent the black people.
100 million
is a lot of money. It's a lot. Bro, you're comfortable.
Enough.
Ukifika $1 billion, you're more than comfortable. Uko na watu ni
$1 billion sasa ni jina unatafuta. Yes, pesa
for sure.
Just now it's a name or a legacy. Something else.
So the best way to make this money, guys, ni kutrade tu hizi pesa zao se. Their accounts, their companies. Even though wamekuwa hakuna billionaire hapo wamekuwa employed. I mean ana earn to salary.
Hakuna.
Ni through the stock. It's mostly through the stock market.
That guy made a lot of money on Netflix.
Yes.
Because Netflix moved from about 200 to 1200.
Nakumbuka tuki-analyze kwa ile Zoom call yetu. Looking at Zoom. Netflix. Because, at the same time, a short way you guys can start looking at stocks is to look at products you use on a day-to-day basis. Why you pay Netflix? No, angaliangi stock ya Netflix if you're in the finance market.
Yeah.
Why you use Safaricom
Windows
every day?
You don't know where Microsoft stock is.
Ken squeeze alifanya very good analysis ya Safaricom. You use Safaricom.
Safaricom has actually clocked a new high. It's now trading at 28.1. When I was doing the video, it was at 21. So now you would have made almost like 30 or 40% by just watching these videos.
That's true.
So
Why use Apple, Samsung, whatever you use?
you don't know their
And
stock.
you don't know. You buy Nike shoes, mnapenda. Angalia Nike stock. We don't have Teslas, but we look up to Elon Musk, so you have to watch what he does with Twitter and all that.
Yeah.
Palantir is another good one. Yeah. So anyway, that was just a little banter to end the podcast for today. It's good that I naenda to follow up on these wealth people. I've been working on myself.
Now you need to also see what the others are doing.
Let me see what
As you've been working on yourself, others are also working.
Kujua Mark Zuckerberg akona double wealth. Bill
His
Gates.
stock has also done quite well. And you know, Facebook, there was a time Facebook stock was very cheap.
Yeah. It
The other
became
day,
very cheap.
2020,
Not
2022.
2022. During
After
that,
COVID.
after COVID, you remember 2022, there was a sort of a bear market, pia kidogo.
Yeah.
And that your time, time, tunakumbuka 2022 ndo vitu za umse alitoa AI, ChatGPT, nini, so umse pia kaleta metaverse, people kusema hii na yako itawaka. Stock yake ili crash that time. It was bad down. He was at 50 billion.
Yeah. Now he's back.
He's at 260.
Boss.
Yeah, so the CEO wa Netflix anaitwa
Reed Hastings alitoka.
Reed Hastings, adag nigga pia amengangana. He's a rich nigga. Anyway, easy to ongea off camera. So guys, so hope you've enjoyed that, and like we always say, stay woke, stay financially literate. We'll see you in the next one. Peace.